Revolut enters Irish mortgage market, disrupting traditional banks in 2024. Imagine a financial disruptor entering Ireland's mortgage scene, ready to shake up the status quo. That's exactly what Revolut has in mind. The UK-based fintech giant is edging closer to offering home loans in Ireland, with plans to run a soft launch this autumn before going full throttle by year's end. Their goal? To give the dominant Irish banks a serious run for their money in their most lucrative business. Revolut has already dipped its toes into the Irish market through a trial phase in Lithuania, its home of the Eurozone banking license, where it has issued some home loans to test the waters. According to Joe Hennigan, CEO of Revolut Europe, the company expects to finalize testing by the third quarter of this year, with the full launch in Ireland likely to follow in the final months. While initially planning to roll out in Q2, Hennigan admits that predicting exact launch dates can be tricky, and delays aren't unexpected. Still, the ambition remains clear: to simplify what many see as a complicated, often frustrating mortgage process, making it more streamlined and customer-friendly. Revolut plans to start offering mortgages directly through its app, supported by phone staff due to the nuances of underwriting. And down the line? They might also work with brokers, who handle nearly half of all Irish home loans, to broaden their reach. With about 3 million Irish users, Revolut sees a huge opportunity to capture a slice of the mortgage market, currently dominated by 3 banks that issued €12.6 billion worth of mortgages last year, about 92% of the total. The brand is also eyeing other challengers like Avant Money, ICS Mortgages, and newer entrants such as Nua Money and Moco. Hennigan hinted that Revolut plans to be competitive on price even if rates are still under consideration, aiming to attract borrowers looking to switch from their current lenders. This comes amid a shifting landscape where the European Central Bank is lowering interest rates, currently at 4%, which might influence borrowing costs. Revolut's financial strength backs its bold move. Last year, the group saw a 129% jump in net profit up to £790 million, €922 million, driven by card fees and interest income from surplus deposits with major central banks, including the ECB. Their revenue hit £3.1 billion, with interest income making up a sizable chunk. Despite having over £22 billion in customer deposits worldwide, the company's current lending volume is relatively modest, mainly consisting of personal loans under £980 million. Recently, however, it has become more prominent in the fight against financial crime. According to reports, Revolut was the target of more fraud complaints than any other financial institution in 2023. But they're investing heavily in technology and security measures, saving an estimated £600 million in potential fraud last year alone. While it may be more resistant to refund requests from scammers compared to traditional banks, Revolut assures customers that it's dedicating significant resources to combat financial crime, with advanced systems and improved customer service, achieving faster resolution times. All of this sets the stage for Revolut's big leap into Ireland's mortgage market, a move that could bring more competition, better rates, and simpler processes to Irish homebuyers in the near future.